Recording. All right, guys. So welcome to another Sunday Market Blitz. So every single Sunday, me and Nick hop on, run through analysis for the week, just kind of spitball some ideas that we have about all the different pairs that we are following. Session is going to be recorded, so we'll post this on YouTube afterwards. So if you guys miss any of the pairs that we go over, you can just go ahead and rewatch it at the end. And yeah, Nick normally gets started, covers some DXY dollar index, Forex pairs, gold, and then I'm going to hop in at the end, cover some other pairs. So if you guys have questions, hit up the chat throughout the session. And yeah, if you guys are a first timer, just pay attention, look at all of our trade ideas, and whole purpose of this is to just compare it to your own analysis. So let Nick get into it.
Yeah, so exactly as Angelo said, we're going to present to you guys our analysis for the week, the pairs that we're looking at, and it's the Mother's Day edition. So hopefully you guys had a good Mother's Day, those of you that are all, celebrating. But we're going to jump into DXY to start off. This is how we always started off, and we don't actually trade DXY. This is just essentially representing the strength of the dollar, right? And we just want to follow and be aware of what that is, because it makes up for 80% of all trade. It's the reserve currency, so it has some influence, right? Wherever the dollar is going, whenever it's moving, or in an impulse trend, a lot of the market is going to follow, right? It has a huge impact on most of the majors, which is what we mostly analyze, right? All the USD pairs will fluctuate to a degree, either correlated or inversely correlated to what this is doing. So it's kind of good to understand that. And we don't trade like 1-to-1 on this, like it's like correlation wise. We take it as an indication. So we can see that very clearly here on the daily. The dollar's been bullish, and we've actually seen an increase in volume lately, and we're clearly at a key level of resistance, a major level. So we can take that information and use that on actual pairs that we trade. Okay, so let's just analyze this, break it down, see what the dollar's been doing. All right, so we're clearly bullish on the daily here. And again, we are at 103, and this is a key level, right? We've seen this level react as a major zone, both as support and resistance in the past. So we are technically, we're expecting some sort of reaction here, which we've seen already, some sort of consolidation. Price action has slowed down. We saw this this rally here kind of stop, right? It didn't blow through the level. So obviously there's something happening here. Now we can drop to the 4-hour and just analyze this a little bit more, but it's important to understand that the dollar is overvalued right now. It's very overextended. It needs to pull back to some degree before we can consider things, normal market conditions again. So let's just see what's going on in the 4-hour. But, again, know that we need to fall quite a bit before we even see structure. So we're at 103. What's going on here? We ran into this level, started consolidating immediately, right? So this is a range now that's formed. Fake out here. Fake out here. Nothing's really broken yet. It's still consolidating. So from here, it's really easy to see what has to happen in order for this range to stop. And that's either going to be the start of a bullish trend or the start of a bearish trend on the 4-hour. So if it's going to continue bullish, we need to see really this resistance here clear, new high, higher low, confirmed, and then comfortably we can say, okay, the dollar's not done pushing, it's still rallying, and then we'll again take that information into other pairs. Now, the most likely, in my opinion, just because of what we've been seeing, is ranging. So it's likely that it'll continue to range, and we'll find some reaction here. It'll head lower and then react at this level. That's the most likely. And then for us to completely consider this bearish, again, on the 4-hour, we need the range to break in a bearish way, meaning price action falls below the range, establishes a low, confirms a lower high, and then follows through and starts heading down towards support levels, towards structure levels, and so on. So it's a little too early to really understand what or where this is going for the week ahead. Really, the only clues, the only evidence we have right now is the overall trend, which has clearly been bullish, right? We know that. We know that there's a lot more buyers present than sellers. So that's, obviously a huge indication as to where it's most likely going to go. But yeah, that's the dollar. So a lot of potential, but, don't jump the gun. We really want to make sure, because the dollar's been, especially lately, really the big mover, the big dog in the market, right? Anything that has been going on with the dollar, we've just been seeing crazy movements, really abnormal stuff, much higher volume than normal, right? I mean, this is AU. I'll measure this too in a second, but so overall, we're bearish now. We actually were, let's just follow price action. Let's zoom out a little bit. So this is clearly bearish here, right? Lower lows after lower high, lower low, lower high, so on and so on. There was a transition here where we broke this lower high. Then we were bullish on the daily, right? We're pushing up, pushing up. Okay, we found resistance here. It came back down. We saw a little bit of a transition here, but really when we broke this level, 0.725, where we got our first higher low, then we were fully back to bearish on the daily. So we got this nice lower high too that confirmed, and now it's following through. So huge bearish momentum on AU. Okay, clean structure on this retest. But yeah, definitely bearish for the foreseeable future. So let's go to the 4-hour and see what's going on here. So just to bring us back to the high volume topic, for those of you guys that do trade AU, you should know that this is usually one of the slower moving pairs. I consider this a beginner pair, and I often recommend this to, traders in the community because it's a great place to start. Normally, it forms great structure. Again, it doesn't move too much, so you can really get a good amount of time to make decisions. But look at lately, this swing here, right? And again, this is directly influenced by the dollar. Look at this swing to the downside. Just on that one impulse, we're looking at 300 pips. That's huge. These are GJ numbers normally, right? That's a crazy swing for AU. And then to the upside after we hit support, another 230. So heightened volume right now, guys. Things are a little, far from normal conditions, as I was saying. But here we are right now. Again, price action dropped pretty hard, hit the low at 0.7, came back up, got structure, and also our lower high. So this is a great confluence area. Can you guys see that, right? We're just past structure. It's a recently broken support level, now confirming as resistance. And it's also, higher time frame level. So it's even more significant. And also the 200 EMA is there. So there's a lot of confluence here. We're expecting this. If you guys looked at the previous analysis from last week, this was on the table, waiting for a retest, tap this level, and then follow through, which it did exactly. So it's pretty much an active trade. We're expecting it to hit 0.74 and then react. So it's pretty much completed. So we'd actually remove this now and just consider, what we need to see in order to continue shorting. And that would mean a break of 0.7, a new lower low, lower high, and then follow through. Then we could consider shorts here. Okay, now if this is going to go bullish, there's a lot that could happen. And the first would be this. This is what has to happen first in like a series of steps before we can consider long scenarios. So this would be the first, okay? Rejection off 0.7 as support, start heading back towards this resistance. And then we need to see again, this 0.725 tapped and then broken and so on. But for now, everything suggests bearish. There's so much that has to happen. This really has to prove itself for us to consider any sort of long scenarios. Okay, at least according to this time frame. If you guys want to do some scalping, to each their own, that's up to you. But according to this strategy, we're very far from a long opportunity. Everything right now, again, is pointing towards more shorts, right? More bearish activity. Because there's nothing really here. Like if you just look at this chart, right? Is there anything here that says bullish, right? Why would you kind of trade against that, right? For a swing strategy anyway. So that's AU. Definitely looking good. Anyone who caught that trade, good for you. Looking kind of like the same thing this week. Just want to get below this level, get the lower high, and then we're short. Okay, now this would also depend on the dollar being more bullish into the week, right? Because that's kind of what's been driving this as well. AU and the dollar share an inverse correlation. So that would just be another driving factor to RTA here if the dollar continues bullish. And notice they're also both at key levels. So AU at support, DXY at resistance. Okay, so we'll see how it plays out. Interesting to note, though. All right, so AJ is next. Let's go to the daily, and we're going to get the trend, the overall trend from this time frame. And the best way to do that is just follow price action, right? We saw over here that there was key resistance at 83. We're getting higher lows leading up to that. Finally, it broke, and then we're bullish from there. Now, you guys can notice, pretty obviously this is really dramatic, right? A bit overextended. Could be due for a pretty big pullback. So it went bullish from there, and now we've been consolidating after we hit 95 resistance. And now it's kind of looking like a daily head and shoulders, right? Here's the neckline right at 91. Here's the left shoulder, right shoulder. This would be the head. So AJ is known for this. AJ likes throwing gigantic head and shoulders and then falling off a cliff. I can at least cite friggin' 50 examples from analysis alone on EJ over the past couple of years. It's nuts. So this could be, you know, a reality, a huge head and shoulders kind of playing out. But until we break 91 support, we're still technically bullish, right? This higher low is intact. We're still there, waiting, you know, for that to break or, you know, bounce from there. So still bullish on the daily, but we do notice that pattern. So let's go to the 4-hour with that information in mind and analyze this a little bit further. So here's the whole pattern, right? This would be the left shoulder. This would be the head, neckline here, right shoulder, and this is still forming, right? So we're going to break this down and we can identify two zones, 91 again as support, which is also the neckline, 92.85 as resistance, which kind of rests at the top of the shoulders, if you will. And, you know, we've been reacting quite a bit at that level. And it's kind of showing like it's a bit of a range, the way we've been reacting at support versus resistance. So the likelihood of this, you know, continuing to do that for the week ahead is very strong. So right now it's kind of already executing. We just got an engulfing there, looking like it's going to head down towards 91. And the way I play head and shoulders, there's kind of two ways you can do it. You enter on the right shoulder if the risk to reward is in your favor, meaning for me, it at least has to be 2-to-1 by the neckline. That way the trade is safe and it's not really, you know, you're not risking too much. If this was a 1-to-1, it's just not really worth it. You'd rather just wait for the neckline to break. But this way, you know, it actually makes sense. There's enough volume where we can get a good risk to reward and then ultimately wait for, where's that brush tool? Wait for the neckline to break and then get in on the same thing, which would be a lower high below the neckline right here. Enter somewhere in there. And obviously that's a much larger trade, much larger risk reward. We can actually map that out just because, just for a little bit of education on this one, 250. And then we're going to risk about 100. So this, again, you know, will vary slightly depending on where this lower high actually forms, but well over 2-to-1, 3-to-1 even, but a lot more volume on that trade, a lot more room to run. So that would be kind of like part 2 to this if it plays out that way for this week. And then maybe at the end of the week, it'll kind of break this zone and then we'll have that new analysis going into next. We'll see. That's one possibility. That's one way I would play this based on what I've seen in terms of this head and shoulders and then how price action is playing out now on the 4-hour. So keep that in mind. We also have to consider the opposite, right? Long scenarios. So what has to happen for us to consider AJ bullish, where it's comfortable to take long scenarios here on the 4-hour, or well, see the start of a trend on a 4-hour and then get into trades at entering on the 30-minute, 1 hour, however you want to do it. But what would we need to see? What would price action need to look like? And that would be a break of 92.85. So a new high above and an actual higher low. So not this. Notice how this popped above, failed to react at 92.85 as support. Notice that there's no bounce there. Total lack of reaction. We need that reaction over here. So push above, reaction, give us the higher low. We find support and then it pushes up. That would give us confidence in considering long scenarios because now we have the start of a bullish 4-hour trend, right? That's at a good confluence area. You know, clearly above a level that we had seen reactions at many, many times in the past. So that's where that confidence is coming from, right? And that would be a pretty good long scenario, it looks like. Good risk to reward, pretty tight stops. But yeah, so there's some opportunity here on AJ, finally, right? We're kind of just waiting for something to play out. But yeah, we got some opportunity. So we'll see which way it goes. We'll be ready. Set some alerts, be aware of 91 especially. Okay, let's move over to UJ. Oh, damn, this thing's taken off already. Yeah, again, I mean,
UJ's on the move.
It's just popping right now. But I mean, super correlated to the dollar. I mean, that's no surprise. Actually, the thing with UJ lately is if you were to just measure like percentage movement on DXY versus AJ is kind of like doubling that. So that's why it looks so much more dramatic, which is the point, you know, super dramatic looking essentially compared to the dollar. So it just reacts like crazy. And then, yeah, to that point, we're extended here. Clearly bullish, clearly overextended, really due for structure. And the higher we push, the sketchier it gets because the higher we go, the, you know, more likely that we're going to find resistance and that pullback's going to come and it's going to be aggressive and it's going to get ugly and no one wants to be on the wrong side of that. So definitely extended, but bullish. Keep that in mind going down to the 4-hour here. And then let's break this down. All right, so we're at a high. This actually played out really nicely on the 4-hour, which was surprising. I mean, this was like really like contradicting for a while, since back here to like all the way now, right? Because like we're overextended on the daily, but we're getting like really nice channel examples here on the 4-hour. Good structure, good flags. So it's just kind of been annoying because there's always like that looming, doom of UJ finally falling down and, going to retrace. But, whatever. We'll go through it for the sake of analysis, right? We have a clear bullish channel here, super clear, right? Like literally holding the perfect characteristics for a bullish channel. Higher highs, higher lows, higher highs, higher lows, little periods of consolidation, and then good follow through, breaks of resistance, nice retest, good rejection. It's just perfect. And it's just continuing that way. There were so many trades in here, right? All the way up to 127.7, or actually, I'm sorry, 129.5 area, where this flag started forming. Right, so we got the impulse. There was enough volume to consider this the flag pull. Then there was good consolidation here, giving us the flag. It even followed through after a little bit of a fake out. You got to be careful on that right there. But it did follow through, right? It continued, which is what a flag's supposed to do. And it shot all the way to 131.25 area. And then it's starting to get ugly. Now, this is crappy consolidation. It's not a flag. It's not really a good rectangle. We already got some fake outs. And now we got like impulse from buyers going on right now, right? Just a little bit of bullish volume injected into the market. As soon as we establish this fake out, it's coming right back. Now we're at the prior high. So it's really hard to see what this is going to do. We know what we want to see, which is a pullback to structure. Ideally 127.7 pulls back. We get the higher low, spend some time in this area. Wouldn't mind a pattern, maybe a double bottom, just some sort of consolidation. And then it can continue a little bit. That would be nice. But honestly, guys, there's no trade possible on this. No safe trade that I would even recommend right now. This consolidation is ugly. It needs to pull back. And yeah, I mean, it's just really ugly. Not much to say. You got to wait on this. Like we could throw some measurements to show you guys really how far away we are. Truly, 300 pips from 127.7, which is really our next level of 4-hour support. So a lot has to happen here. And based on what the dollar's looking like, this probably is just going to keep going. It's going to get uglier from here. Now, if we do have a lot of volume, this will probably start to consolidate at a high, probably closer to 133.5. Maybe we'll get resistance there. We'll see. But yeah, this thing is like pegged to the dollar so hard right now. It's annoying, right? So if this pops to the upside, so this is DXY, guys, right? US dollar. If it pops to the upside, we get structure above. UJ's gone. This thing is just, look at this. The DXY isn't even doing anything. It's not even doing anything. And UJ is just shooting to the moon already. It's so ready. It's like, what's that horse's name? Strike Rush? What's Rush? That guy that just won.
What, the Kentucky? I didn't even realize the Kentucky Derby was happening.
Yeah, the Derby. This is that horse, guys. He's gone. Gates are open. UJ's out of the gate. Oh, it's a mess. Yeah, that was pretty funny though.
I would be careful, guys, with this UJ push here. This thing could easily wick. It's only the first hour. For the most part, we're not really trading right now unless we're taking a swing type trade, right? I mean, we're not trying to take any quick impulse entries right now.
Right, exactly. So this one is effectively at the bottom of my watch list, which is kind of sad. UJ hasn't been at the bottom in a little while. AJ spent a little while down there, but now it's UJ's turn. But I mean, just look at the daily, guys. This thing is just, it's not safe. You're buying at the high. That's like the cardinal rule. It's sketchy. So you got to really wait for that to drop. But let's move over to EJ. We still got more to look at, guys. Don't worry. There's more opportunity out here. Like EJ. So EJ is looking good. We are overall bullish. Oh, this is from an example. Whoops. All right. Overall bullish, holding pretty steady. So what happened is we got this really clear 4-hour bullish channel here on EJ. We smacked into 137.5, started consolidating. This is like a phase of consolidation right here. Popped up, another phase of consolidation. Then it finally broke 137. We hit a high, came back down. Now we're finding resistance at 137, and there was more consolidation there.
We lost him.
Is that a hair on my throat or something?
Oh man,
that was a random. Be careful.
He's gone. He's out.
So the consolidation looks like it's ending. Looks like we're just getting above 137 from this time frame, but we're going to drop to the 4-hour. We are overall bullish, so things are looking good already. Let's go to the 4-hour, square this up, and see what we're looking at. All right, so consolidation just ended right here at 137. So now is the time for structure. We're looking for a higher low just above this consolidation, just above the range, looking for that higher low to confirm, follow through, and there'd be a nice little trade opportunity there. Don't let the size fool you guys. This is actually a pretty good size trade. It's 110 pips, risking about 35, which is a pretty safe stop loss, honestly, but it will vary slightly depending, again, where that higher low does form, where those wicks form, if one does. So be aware of this. We are somewhat close to an entry here, and we were target higher towards prior resistance, and then ultimately prior highs, which is much, much higher. Right, so we got some move. We got some action here on EJ. Could be good for the week. Looking bullish. Honestly, nothing here suggests bearishness yet. What would is if we broke below 137, right? So this would be a lot of volume. We've seen this before, right? Where it looks like it's going to break to the upside, doesn't have enough momentum, and then finally the volume kicks in, but it's the opposite direction, smashes through the range, all of a sudden not respecting any levels, right? Blows right through it, then gives a structure, and then follows through. So there could be a short scenario here as well. 135.5 will be the target as support. Okay, so keep this on your radar as well. Either way, just follow price action and you'll honestly be fine. And if you follow price action, wait for the market rather than try and predict it. You know, whether it's this long scenario or the short scenario, you'll have a good trade on your hands. Okay, patience pays. So we got a 3-to-1 there, probably the same to the downside. Keep your eyes peeled and wait for this one to execute. EJ for the win. Let's go. So this one's gonna be high on the list this week. Let's keep an eye out. Then
that one
gold.
that one looks pretty solid. Looks pretty
It's
close.
straightforward. It's nice to see some clear price action, right, in these times, guys. It's like a diamond in the rough these days. It's pretty nuts. So let's move over to gold. Oh, gold, pain in the ass. It's good to see movement. I mean, finally, we're at least doing something, but we were very bullish since all the way back here since February. We've been bullish as hell. We almost hit an all-time high. We're a few dollars short up here at 2070, came back down, and then we were consolidating at a key level, 1930. And this was the make or break zone. So literally since this rally back here, and we fell to this low, this has been the make or break, right? So as long as we're above it, price action is generally bullish. If we're below it, we're looking more bearish. So we spent a lot of time consolidating here. It broke to the upside, didn't make it to our real final target. I remember this trade very clearly. There was a good opportunity here. You would have had to clip it, and then it came back with huge volume. So literally just the example I actually described on EJ is this daily example here on gold, right? It consolidates for a while. It looks like it's going to break to the upside. All of a sudden it reverses, volume gets injected, and then it's bearish. And it falls through the range, right? And it all of a sudden doesn't respect these levels. Falls below, retests, and then is bearish. Okay, we see this example all the time. It's very, very common. And here's a great daily example. So since this range broke, since we got below 1930, we're now bearish. So we have a different perspective on the market now. We're analyzing for shorts. So now let's go to the 4-hour and see what's going on. See what the opportunity is down here. Okay, so now this is ugly as well. I mean, this could be some sort of like inverse head and shoulders representing consolidation. How the bears came into the market pretty strong. There's a fight going on. They end up losing. Now here come the bulls, right? Here come the buyers. That could be what's going on. It's too soon to tell. I don't like this slant. If these two were a little more, lined up and price action here was cleaner, I would maybe consider that. But based on this, I'm not going to, stretch it for the analysis. I'm not going to do it. It's bearish and there's just a crap load of volume, right? So if anything, this is a channel, and then we've just had these impulses, right? So like the buyer's last attempt here to push price action back up. It hit the bottom of the range at 1915, completely failed. We consolidated just below 1870, failing to get a lower high. So this is a fake out, basically. Came back up. Here's the last attempt from the bulls, right? And then it gets pushed right back down to 1870. So this is kind of a mess. We need to see 1870 really react in a way that's going to give us the next trend. So we're looking for higher lows above 1870 or lower highs actually below 1870. which is what we failed to get over here. We need to see the follow through. So this became our new key level, right? So if we do break below and we do kind of hold this 4-hour bearish trend, stick with this kind of volume here, we're going to see a nice impulse through 1870. It's going to pull back, get the lower high, and then we got a nice, short opportunity on our hands. We'll target down towards the weekly at 1830. This will vary slightly. It's looking like a 3-to-1 to a 2-to-1 safely. But yeah, we'll vary slightly depending on where price action actually forms. But this is a reality, right? This is what potentially could happen this week. So keep an eye on this. If this does bounce, again, if your strategy is more intraday stuff, there will be some long scenarios here if this does bounce. I probably won't consider it unless it's something super, super clean. Because I really just want to get back above 1930 for longs. That's where I'm like the safest according to, just overall trends. Because this really could bounce between these two levels for quite a while and then give us, an actual move. So just be aware of that. But I mean, it could curl back up to 1915, run for a good 400 pips or so. So, that's what gold's looking like this week. Now, again, it is very correlated to the dollar, inversely correlated to the dollar. So if the dollar is pushing up, we're going to see gold go down to some degree. Okay, they just have opposite trends. That's the simplest way to put it. And notice we're both at key levels. Again, here at support on gold, while DXY is at resistance. So, we'll see. There is some sort of correlation there. Something just to be aware of. But yeah, so this is gold. And that's actually the last asset that I'm going to analyze for you guys. Quick recap is going to be DXY, AU, AJ, UJ. What a pain in the ass. Look at this thing. EJ and gold. And as always, they're live charts. So they're posted on TradingView. And we dropped them in Telegram, Discord. So, you guys can play these forward. They're like active charts, right? And then follow which trade path price action's following. Just a little extra value. But yeah, that's pretty much all I got for you guys. I'm going to pass it off to Angelo, and we'll see what he's looking at. Yeah, good stuff, though. Some opportunity this week. Feeling good about it.
Yeah, like you said, the opportunities, at least for like the swing strategy, have been, far and few between recently because of the price action that we've been seeing. So we've definitely been being a lot more patient lately on all of this. And we've been going over that with the analysis, which is fine. I mean, it is what it is. Last month had a little bit of a rough month in the signals at least. So definitely trying to be a little more patient with it. So I'm going to get started with DXY. You see my screen, right?
Yeah, you're good to go.
All right, cool. All right, I'm going to get started with DXY. Like Nick was showing, I mean, we're super overextended here. We went over this last week. We're kind of in this no man's land right now. We're all the way at this high point. We are hitting a level of resistance, as you can see by these wicks, all of this. So we're definitely in an area where the price could reverse. And I'm actually just going to mark a little bit of a zone right here. And this is all the way up on the monthly time frame. So remember, we're always on the monthly and the weekly. And I always just kind of look at these time frames for just like an overall key level of where the hell we're at. And then I start to zoom in. Normally I do it on the weekly, but I just happen to bump up all the way to the monthly. And then as you can see, that level that I marked is coming across right now. Normally I do mark them a little bit bigger, but going to leave it for what it is now. And we can kind of see as we're coming down to the weekly time frame, we're at a key level. So we're approaching this level. Last week, we had a lot of wicks. We had a wick to the downside, wick to the upside. We have a wick on previous week, 2 weeks ago. And now we're just sort of hovering around this area. These are definitely signs of reversal. We're definitely overextended right now. As we come to the 4-hour time frame, we do see a little bit of a break. So we had structure form right here, and then we basically had this reversal. So we smashed through support, and then we came up. We could see that we crashed off of the resistance, and now we're fighting again right around the resistance level. So this is pretty much what we're looking at right here. Is price is most likely going to consolidate around this area. Then it's either going to break and really this level, this support level to the downside, like this, and then we're going to see something like a little bit of a retest and then another move to the downside. Now, price could move above this area. It becomes a lot more uncertain if price does end up moving higher. We would have to see a break and then a retest of the support level. I am on the side that price is that DXY is going to come down. That's what I'm kind of looking for it to do. But that being said, it has overall been very bullish. So until we see some sort of break of structure here to the downside, then we should assume that it's going to continue to move to the upside, because it is just bullish on the daily, on the 4 hour, on the weekly time frame. It's been very bullish. So we definitely don't want to go against the trend here, but I am forecasting that we're going to get some sort of reversal. We just have to see support break before we, start to turn and be more bearish on this. So at the moment, pretty bullish on DXY, but I am anticipating some sort of reversal. So always like to cover DXY first, and then I like to come down and go on our first pair. This was the analysis that we had given out last week. So let's it's May 8th. So let's go back. Let's go back to last week. Like to do this lately where we kind of see where were we last week and, what was the idea and how did it play out. So going into last week, coming up on the weekly time frame, we just had this huge fall off, and then I was pretty much just anticipating a reversal and either to hit support at this level, which is a weekly support level, or break support and then retest and go to the downside. So long story short, last week we were trying to be bearish, and then as we could see, price ended up moving to the downside. We ended up breaking support, retesting as resistance. So this would have actually been an entry according to our rule here, according to what we analyzed. And then we had two entries marked. So we had one area up here, we had one area down here. We would have clearly gotten stopped on this entry. Right here, we would have gotten stopped out. This entry would still be live though. We would still be in this trade. We'd be up about 156 pips right now. So over 1-to-1. So I'm going to kind of lead off of this trade because we are overall still bearish on NZD USD. As we come to the weekly time frame, we can see last week's candle formed this retest, and now we're just pushing to the downside. We've broken below this support level right here, and pretty much the next level of support that we're looking to reach is all the way down here at the 6-1 or 6-2 area. So I'm always trying to swing from zone to zone when we're doing the swing trading. So coming to the 4 hour time frame again, let's just look at structure right here. So pretty much all I'm looking for price to do at the moment, we're just going to adjust this, is literally we're below this resistance, so we can roll stops pretty much if we're in this trade to this level. And I'm pretty much just assuming that price is going to continue to respect the resistance level. So this would be another potential re-entry area right here. And we're just looking to continue to ride this thing to the downside. So I'm going to move this over. This is the trade we're currently in with NZD dollar. And if this does line up with DXY, because if DXY continues to be very bullish, this thing is going to continue to move to the downside. So definitely keep that in mind as well. So let's go to GJ next, and let's go and take this one back to last week and see where we're at. So last week with GJ was actually very good area for an entry. And let's pop up to the weekly time frame and look at why. So on the weekly time frame on GJ, we had this resistance level. What is this based on? If we just zoom out, we can keep zooming out because it's based on a lot. And whenever it starts to get really crowded, we could even bump up time frames here. And I'm just trying to see, why did I draw this zone? So I had resistance here. We had support here. You could see all the support. We had obviously support here that took off to the upside. We had resistance right there. And then we had support here. We had resistance. So obviously this is definitely a key level where prices reacted to many of times. And then going into last week, we had this doji candle, kind of like an inverted hammer candle at the resistance level. That's a huge reversal signal. Thing that had me a little bit shaky was this large wick from the previous week. And then as you can see how last week, if we bring this over. You can see how last week played out, had a little bit of a push that ended up pushing the downside. So let's go to the 4 hour and let's actually play this all the way forward. So on the 4 hour time frame, we had this trend to the upside. We had a break of support on the trends. And then we were trading below the red zone. And I was actually looking for entry at about the 61.8 area. It did not come up to my entry. So I wouldn't have actually triggered this trade if I were to get in. It was about 70 pips away from the entry. It did end up moving to the downside. So I'm going to actually delete this. We're going to just redo the analysis based on where we're currently at. And I'm actually going to move up to the daily time frame just to kind of see. And one thing I'm noticing on the daily time frame is actually not the best pattern in the world, but a little bit of a head and shoulders pattern. You have the right shoulder that just formed. So pretty much at this point, we're looking for price to make a break below this support level, which is pretty much in line with how we're forecasting this already. And then this would really be the trade idea, targeting with the head and shoulders, guys. You're normally targeting whatever the height of the head is. So we'd be targeting something like this. This isn't like perfect, but you can see that it kind of correlates with this support level down here. So that's really what we'd be targeting. And that would be a long ways away, right? It'd be 900 pips or whatever, 90 pips away right there. It'd be a huge swing trade, right? 900 pips away to the downside. So let's come to the 4 hour again. When are we going to look to actually get in on this trade? How I see it right now is we're already in a downtrend on the 4 hour time frame. We clearly broke support, like we went over this before, broke this level. We had this lower high, but look at all this minor support here that just got broken, just smashed. And now we're retesting, we're retracing. So ideally, where we get in on this is going to be in this area. That would be based on the 4 hour time frame. This would be the most ideal area to actually enter a trade. We enter here, put stops above the right shoulder. And then again, we'd be targeting, we're always using the weekly time frame to look where our targets are because we're always trying to do a swing trade. So we'd be targeting all the way down here, which would be, this is obviously the previous resistance level, the previous high point. And then coming back to the 4 hour, that would give us a 3.71 risk reward trade. And even if we move up the stop loss a little bit, we've got a great risk reward trade here, shooting for 500 pips, stop loss is at 150 pips. And this is just like the true swing trade here. Obviously, if it just moves to the downside right away, then we're going to have to take another entry based on the retest of the neckline. But this is the immediate trade idea for GJ. We're going to put this here. We're going to take this off, and then we're going to see how this plays out next week. So just went over a few things here. Went over this pattern, head and shoulders pattern. Went over the weekly time frame using multiple time frames to figure out where we should take our trade. And then did some forecasting, placed the actual entry on here, showing you guys how I kind of find my TP level, my stop loss, everything like that. So that's GJ, definite trade idea for this week. This was one we had last week. GU, as you can see, ended up smashing to the downside. Let's go back, just like we did with the other pairs at the beginning of the week. And let's take a look. So pretty much what we were forecasting last week, this is overall very bearish, right? We were looking to take kind of a counter trend trade here. Looking at the weekly time frame, this lines up with my rules, which is we're always looking for what's the weekly support zones. We have resistance in this area. We have support. We have support. We have resistance. We have resistance, right? And then the previous week, we had this huge wick. So we had a couple confirmations. This isn't exactly a reversal candle. And that's kind of where we were a bit early, but this definitely is showing us that there's some resistance at this level. And then coming to the 4 hour time frame, this is the reason this trade got invalidated. I mean, it could have went in our direction, but simply just didn't wait for enough confirmations here. Pretty much we had forecasted this to retest and then take an entry right there, right? Realistically, what we should have done is we should have waited for a lower high to form, so something like this, and then actually look for a break of the lower high, and then on the retest, we would then go to the upside. So just got in a bit early on this. This was just bearish overall. So you can see this is actually what we'd be looking for. It had a break above. So once this broke, if there was a follow-up like bullish engulfing or something after the break, that's when we would actually be trying to take buys. And then as you can see, just went to the downside. So this week at this point, considering how bearish this is, pretty much what we're going to look for, it's very simple. This is trending bearish on multiple time frames. So we're just going to look for a retest of our previous support level. This is really the most reliable way to take trades on this. Look for a retest that aligns with structure. And then where are we going to target? We're going to have to zoom out because now we're kind of in no man's land. And this is definitely somewhat of a support level down here. We'd have to zoom out and really pull. So we've actually, you could see here, we've actually only been down in this area as of most recently 2016, 2019, 2020. So we have not been below this area. As you can see, there's like a huge spike below here, but then we closed above. So this would have to be the target zone. I wouldn't be targeting much lower than here. And let's see what the risk reward is. So it'd be 2-to-1 based on that trading idea. Now this thing just continues to push to the downside. We're going to kind of miss this trade. And if we're trying to get in on this and be a little bit more risky, what we can do is we can actually come down to a lower time frame right away, and we can see, do we spot some type of pattern here, like a descending triangle or something like that, some type of continuational pattern. Don't see anything kind of too crazy here. I wouldn't consider this to be a triangle just because this already broke support, like definitely doesn't line up. So I'm going to take this off. So not really recognizing a pattern here. So I'm going to stick on the 4-hour with my trade idea, just looking for this thing to reverse and retest the resistance before we actually take a trade on this. So definitely there, definitely an idea for this week, just not there yet. Let's go to USD CAD. So this one last week, let's go back. Same thing here. This is right when we opened, right around this area. We could even push it forward. This was still from the previous week. And then it looks like we opened up right here. So this is actually where we opened up last week. So last week on this one, we weren't trying to do anything yet. We were really waiting because this was just at a high point. We weren't trying to take sells here. Definitely was just waiting for a reversal at a more key level. And as we come up to the weekly time frame, you can see we're definitely in a key level area. We have our red zone marked, and this is based on support, resistance, right? So I am expecting a reversal up at this area at some point, and we were pretty much waiting for it to come into the red zone. We can just move forward, waiting for it to come into the red zone before we actually took sells. And as you see, this was actually a decent sell right here. It ripped to the downside about 180 pips. But according to my rules, that's not exactly what I'm looking for. I'm looking for this. I was looking for it to come up, consolidate, break support, change into the resistance, and then move to the downside. That is what I'm looking for on this. So we're going to be patient on this. We're going to wait. It's still very much bullish, but until I get above the resistance, I'd have to see a very clear closure above this resistance level, this 1.29500 level, before actually taking any buys on this one. So just staying super patient on this USD CAD. If the dollar keeps going bullish and we come up to the weekly, this thing's going to continue to move to the upside and continue in this like short-term or medium-term bullish trend on the weekly. So that's something to definitely be mindful of, but I'm more looking for reversals. I see this resistance level. That's kind of my rules right now, waiting for 4-hour time frame to break structure. So that's all the Forex pairs. Let's get into the meat and potatoes here. So we got NAS 100 first. This one has been pretty interesting to trade. Started following this one really 2 months ago at this point, couple months ago. Trades on this one have been really good. Weekly time frame, let's just start off on here. Pretty much broke a huge weekly trend on this a couple months back, I should say. And then at this point now, I've got a couple levels marked. I've got support marked here, resistance. We got support, resistance, resistance. I've got support marked down here. We have support and resistance, support right there. So last week we were pretty much just retesting this. And obviously we're very bearish. We just broke support on the weekly time frame. So coming to the 4-hour, trend is just bearish all the way. So I'm just like looking to ride the trend, not trying to do anything too crazy here. We don't need to reinvent the wheel. Literally, we're just trending on multiple time frames. So we just have to go with the trend. So last week, what we discussed was basically taking a short opportunity literally right here. So this is right where we opened up last week. And this was as simple. This was the simple trade idea. It was literally wait for the retest of resistance. Boom, right here, wait for some sort of bearish signal. Even that, even this, wait for the close. Something like I would have entered on something like that, would have gotten to some big drawdown and then ended up coming back in our direction. And then now that's where we're currently at. So now we're trying to ride this thing to the downside. We're trying to hit our next key level, which is 119. And I would not take a re-entry on this unless we retested structure again. And this isn't as major, but I would wait for a retest of this zone. And then this would be the entry. Remember, we're always trying to do 2 to 1. So I'd have to put stops right above here. So this would be a decent trade idea right there. I'm going to move this across for a re-entry. So look out on this one, NAS 100. Going to continue to probably move to the downside. Don't see why it would reverse at this point. And then BTC. So BTC obviously started crashing last week, ended up moving off of this 39 level that it was holding for 2 weeks.
No.
Yeah, so interesting. This thing just died.
Yeah, it did.
So we've been talking about this, and next levels to look for entry is going to be pretty much this 31, 32 area. We're getting close. We're at about 34 right now. So you can see I kind of have my entry levels marked here. We have this level, we have this level, and then we have the 20 level. These are really, I cannot see it going lower than 20. 20 is the previous resistance on the bull run, kind of the first bull run in 2017. So I definitely don't see it going below 20. But just be prepared, guys. Be prepared for the drawdown. That would be that'd be a big dip. If it starts to go to 20, pretty much, 44% drawdown. If it goes to that level right now, if it goes to 32, it'd be like a 10% drawdown. So guys, definitely keep cash, keep your cash coming in, get ready, dollar cost average into BTC. Remember what the targets are. If you get in down here, this is a potential 4 to 1. Get in here, potential 2 to 1. Get in here, 1.5 to 1, because the targets are remaining at 100K for now. So be careful with BTC. I'm not doing any like short-term shorting or anything like that. With this pair, kind of sitting on the sidelines when it comes to shorting BTC, but definitely getting ready to take longs at these levels, at 30, at 32, and at 20. I think it's, at this point, anything could happen. This thing could definitely come all the way to 20. That's the BTC we know and love.
All bets are off at this point, guys. Anything can happen.
Yeah,
it's crazy.
Wherever, we have a bear market pretty much. Bear market now. We got money moving all over the place. And just remember, like, the fundamentals for BTC are very strong. Like, we're going to have a lot of adoption when it comes to governments utilizing BTC and just in general, companies investing their money. There's regulation, which is making institutional money become more acceptable to be, deposited into this. And this is really just an appreciating new asset class. BTC is really just the index of all other cryptos. So I mentioned this on the previous webinar last week, and I'll mention it pretty much every webinar, is when we were here, you wish you purchased obviously all the way down here. You wish you purchased here. You're like, oh my God, you purchased here and you come here. fucking lit. You wish you purchased here, right up here. You wish you purchased there, 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 there. Well, we're right here now. When we make it up here, right? Or I should say, if we make it up here, you will wish you purchased down here. You don't wish you purchased here or here. This is like hell if you purchase up here. This is where you lose all your money, right? You always wish you purchased on the higher lows. So right now we're at a low. We're in a downtrend. We have to look for what are our support levels. Just like this area, this was a support level. Good area to take buys from. This is now the same thing. This is a support level. Good area to take buys from. So every time it hits one of these support levels, it's probably good to just start dollar cost averaging into your position for BTC. That way you guys can actually take advantage of this. And once it does hit a new high point, you're not sitting on the sidelines like, oh shit, I should have got in, yada, yada, yada. So that's pretty much it. So that's all my analysis for the week. We've got everything posted inside of the Telegram and the Discord. If you guys aren't in the Discord, make sure to join. Link is in the Telegram in the pinned message. Discord is where Nick's hosting live sessions pretty much every single week, twice a week. We've got the support in there. So if you guys have any questions, best place to get support is to create a ticket. So you can ask Hanzino, who's our support rep. So definitely get in the Discord, best place. We're going to keep growing that. And if you guys are in the Telegram, go to the files. That's where all the free guides are posted. Nick's posting those guides for everybody. So make sure you guys get in there, download that. And yeah, pretty much it. No promotions or anything right now. If you guys want to do the funding, head over to the fundedtraderprogram.com. You guys take the challenge. You guys are taking the challenge now. Best of luck. This week, last week was a little bit rough because NFP week is always pretty interesting. So yeah, that's pretty much it from you guys. Thanks for hopping on. We'll upload it to YouTube, and best of luck to you guys this week.
Yeah, guys. Happy trading. Take care. Peace.
But yeah, enjoy the week. We'll see you guys next week.